Hello, good morning. Welcome once again to uh, the morning market review where we make daily profits. My name is Victor, and I'm going to be your host this morning on this review. Um, so currently we have just a few persons on the call, about 17. Now, as usual, we have way more than that. And so if we start now, we'll keep going back and forth in between some persons coming in to ask questions. So please, like it's just exercise a little bit more of patience. Let other persons join the call before we actually start, right? So just sit tight, and in a few minutes' time, we're going to kick it off. Thank you so much.
Aeromics microphone. Let's speak.
Ivana wants to look on my route. Under the name now look up on the speakers. It's early.
All right, I think we can actually start now. So it wasn't that there wasn't sound, I wasn't talking. I've already earlier addressed the persons who were here just to exercise a little bit of patience. So think now we can actually start. Every other person coming will join us. Don't forget that we are also live streaming this particular session on YouTube. So you can also head over to YouTube to watch this video again in case you miss anything or you don't really get it, so to get more understanding of it. All right. So without further ado, let's dive into our charts. Okay, so basically, well, let's start from the fundamentals. Now, so as you can see, we don't have major fundamentals that can really disrupt market flow for today, except for the fact that we've already had, that's the CPI for Australia dollar, already had AUD CPI, which came out bad actually. So we expect the AUD to be weak, except there is a quick recovery from that particular angle. Meanwhile, the looking out for new home sales for the US is also an economic indicator of people's spending. You can't buy homes if you're not earning. So it's one of the indicators to tell if people are really earning and making money and the like. So USD crude oil inventories also. Meanwhile, they are not really high impact news. And also we have the G20 meeting today. Now this is going to be all day, basically, all day, and it affects a lot of currencies. So we have in attendance the finance minister, central bankers from 20 industrialized nations, including the G7 nations. So you have them here as Canada, Italy, France, Germany, Japan, the UK, the US, and the likes. So it's a closed-door meeting, but press and officials usually talk with reporters throughout the day. So basically, we are looking out for this one also today. Meanwhile, remember they are not that of a high patterns, but you can see a little bit of movement in the market because of them. So I think we have almost a clear day to trade technically. So basically, if you look at your charts now, let me not start from gold. Let's start from currencies. So the euro dollar. Let's see. Okay, the fundamental we had for the Australian dollar AUD. Remember, there was AUD CPI, we came out bad, so we expect the Australian dollar to be weak as at when it came out, and see it was weak, trying to recover. But before now, you see that the Australian dollar was an uptrend before. Now, possibly change direction, especially breaking below these particular levels here. So let me point it out again. Now, this is my 1 hour time frame. If you see this particular level, after price rose, it's started to range around this level, trying to gather momentum, Now, finally, it pulled up. Now, this was supposed to be a retest, all right? It's supposed to be a retest. It came there around yesterday, 2 days ago, yesterday it was around that level, trying to break below. So now that the CPI for it is bad, that's broken below, and retested this area, it's retesting it currently. So we possibly might be looking out to be bearish. We possibly might be looking out to be bearish. Now you can see that for some days now, price has been bearish. This is a 15 minutes time window, but on 1 hour, you can also see we've had 1, 2, 3 bearish days. Or this one was more like a slightly bullish, but we had 1 clearly bearish, 2 clearly bearish. This day was slightly bullish, and today we are looking out to possibly be bearish. So I want to bank on the fact that AUD might be changing direction, since there is already a market structure shift here, right? So from an uptrend to becoming a downtrend again. So AUD might be bearish from now, just start selling, basically. The euro dollar, euro USD. Let me not use this particular cheat code. Just let me just settle for. I think last week, Wednesday, we're looking out to be bearish. We're looking out to be bearish. This on Monday, Tuesday, Wednesday. That day, we were bearish that day, but Thursday, Friday, price became, started pulling back to the upside. Gotten back to this supply area right here. And price is still trying to struggle to fall. So most likely on the euro dollar, although the trend looks to be upward, let me clear my charts here. Yeah, the trend looks to be upward, but in the inside of a massive range. This is my 4-hour time frame. 4-hour time frame, right? You can see we'll be massively bearish, massively bearish. So let me go to my daily time frame. Also, we've been okay. This is my daily time frame right here. This is Euro USD. So this is the last point price came massively down to. But for today, it's very fast, so I might not be dealing with this particular area. Let me deal with the closest support area. On my daily time frame, I noticed that after price moved up, it's trying to rest around this level here. That's one. Then also this particular point is serving as resistance. This particular area is serving as resistance. So if I look at my 4-hour time frame, so now that is ranging, is it that price want to change direction from down, then start going up because it looks likely? So this is what it looks like if I adjust it. So let me adjust it properly. This is how it looks like. So from what I've analyzed thus far, what do you think? What do you think price should do from where price is right now? Do you think price will keep pulling to the upside, or do you think price is going to come back down? Now, this is an open question. This is an open question. It's an open question for as many who would like to answer now. I would like us to participate to answer this question. So what do you think price is most likely to do? Keep pulling up or pull down? Okay. Expecting a possible reversal to the downside. Hassan Dawda will say bullish. Okay. Bullish means you expect it to keep going to the upside. All right. Okay, please, I need more response. I just have like 2% responding to this. More responses, more responses. This is Euro USD, Euro dollar. What do you think from what you can see right now on your charts, on my chart rather? Sell first before going up. Okay, and you Felix. All right. Okay. Yeah, that's I think you're right. So if I will go back to my 1-hour time frame, right, more responses. Bearish continuous, returns the support and up. That's Adeyemi Olalekan rather. Okay. Akolainu said bearish continuous. That means you're expecting price to pull down, right? Okay. Now, if you're expecting price to pull down, you need price to break a particular, a minor level, sort of. So if I will go down to my lower time frames, right? I'll go down to my lower time frames. This is my 15 minutes time frame. Excuse me. Upward trend, S star. Okay. Now that means you expect price to keep pulling to the upside and take out this particular resistance level that we have identified here, right? So for me, basically, for me to continue selling, I need price to just on my very, very low time frames, very, very low time frame. I need price to take out this particular place. The moment price can take out this particular trend like this, then I'll then look out for sell trades, all right? So, but most likely, yes. Now, even if it will pull to the upside, I think I expect something like this to come retest, this level, but you can do it like a false break, then finally pull up, all right? So at least come retest this level, then continue going to the upside. If you have to maintain our bullishness, which is this particular level here. So I'm not giving you any guarantees that price is breaking this particular resistance right now. No, I'm not giving you any guarantees. But if at all it will break, this is the most likely pattern it should follow. Come down to peak momentum. There's a lot of liquidity lying around here. For those who understand, move this market at the volatility, you will know that it's like these that are trying to right? Like we did that is attracted to water. So this was where there is money. You are comfortable working in a place where you are paid well, all right, or where you see money a lot. You want to hang around that area often. Even if you, so how do I put it now? So you have to work to get money, even if you use the money to go on holidays, right? So price probably want to go on a holiday, but first of all, what will sponsor that holiday? It needs to work first to get money. So where the money is, this is where the money is. If you understand what I'm saying, this is where money is. Now, all of this thing that is looking like support here, these levels here, they are what we call liquidity. It's a lot of money lying around here, money lying down here. So price will possibly come down, peak money, that's the peak liquidity, then push to the upside, have enough momentum, to break this particular level. So I don't expect it to just break right now outrightly, right? So some persons can take advantage to sell it, then when it gets to this level, they buy it, beat it back up. So that's for the euro dollar. Okay, we said AUD USD, we are looking at the bearish, the euro USD. Excuse me, sorry. The euro USD, we look out to be slightly bearish than overall bullish, if I thought it continues. Okay, Euro JPY. I think I don't do this particular currency often, and I think I need to be doing this currency often right now. I need to be doing it well. Okay, so from our daily time frame, you notice that we have more like a double bottom right here. In fact, not double bottom, it's more. Let me even zoom out to see if I have even more. Oh, obviously, yeah. Wow, this is interesting. So you see all of these levels right here. Yeah, just for that. Okay, so all of these levels right here, it's more like a support area. Meanwhile, price just recently gave us a bottom here, one, try respecting it here, two, and the third time, three, fourth time, four. So it has failed to break below that particular level. So by 4 hours, this is how it looks like. So now, all things being equal, if price is to respect this hour, should I call it how many bottom now? I think we're at 5-4. So if price is to respect this level, what do you think? Do you think it should keep going down or pull back up? Now, not that we don't know what to do, I just want to get some response from you. So price following this trend line, if I want to, so basically if price is changing direction, like changing direction, maybe from being bearish right now, so I see bearish to becoming bullish. So what I want to do is to use my trend line to follow and see where there is a break. All right, to see where there's a break. I think by is it Monday? No, Monday should be moving average. I think next week I'm trying to do a particular session on trend lines. Trend lines are also very powerful tools that you can use to win a lot of trades. Like win a lot of trades. Trend line. Very, very powerful. All right. So this is what I want to do. Now you notice that before this particular, this is not the first time price was bearish. So you see price was massively bearish here. Then pulled up, then became massively bearish again. So at this point, it changed direction. So what happened here, if I use this trend line, if I use this particular trend line, you will see. So you will notice that from the first point here, I took this second, I took this one. Now, if I just unbiased, draw it straight, notice that price first break, came back inside, respected, first break, came back inside. Now, this time it broke, it now remained above, started serving as support for it, right? So until it got to this level, so if we mark this level now, it started going back to the upside. And for me to be comfortably buying it, the most recent trend that I have. So the moment it broke out here, you probably want to be buying, but it came back here. The moment it breaks out, retest and it holds, then you can start buying. Okay, retest and it holds. So that's exactly what I want to do here. Because if you notice on this particular instrument, it respects trend line a lot. So that's why I always like applying trend line. So how do I approach this one? I'm expecting the possibility of Euro JPY becoming bullish. So since it has come to this level again, even if overall it will be bearish, it needs to retrace. Now, the first point of retracing that is going up should be back to this supply level. Excuse me. Back to this supply level. Right? I have a supply level around here. Price can just use this as liquidity. So come to this level here. That's one. Then if it have some more momentum, it breaks and it goes, then we'll be looking out for price to just come and test this level right. Okay. So these are the two key areas I'm expecting some retracement. So which means I'll be looking out to enter to buy this guy back to the upside. Especially, let me just see if he can drop a little more. Once it drops a little more, then we'll buy back up again and take our profit here. Or if it breaks, but I wouldn't want to push my luck beyond this level. I wouldn't want to. If it breaks, retest, then we can continue buying. But if it gets to this level, take it out. If it breaks, retest, continue to this particular level. So Euro JPY, we should be bullish. And I think lastly on currencies is GBP, JPY. I had my entry was not perfect yesterday on this guy, but I should have had, a very good trade. So what happened was I was aiming for this particular supply area to keep selling. If you notice, let me go to my 1 hour. This guy has been massively bearish. 4 hours, basically. You can see it has been massively bearish, but I'm not expecting it to just start pulling back to the upside like that. Okay, expecting it to take out some of this level. So I was trying to sell it back to the downside again yesterday. So at this level, I took my supply from here. I entered the sell around this level here. So unfortunately, it broke and my stop loss was just, okay, this was my stop loss, yeah. So around this level, and it took out my stops. Now, it went as high as these major resistance level. This major resistance level. So this is on price just basically went as high as that level. Okay. But before then, it hit my stop loss. So coming back down again, can just go for the sell. So for instance, if price comes all the way back here, price is currently trapped in a range. This small range right here. And this is my 15 minutes time frame for GBP JPY. So for those who don't know, GBP JPY is also a very, very wonderful instrument. Just little moves, it gives you good profits. The way gold gives you good profit on just little moves. Yeah, GBP JPY is one currency pair again that does that, as well as Euro JPY. So that's why I said I need to be doing them. Okay, this is one of my favorite most traded currency here since last year, basically. Now, I wouldn't want to buy it although it has gotten to a key support level on my 4-hour time frame, you notice that all of these levels are, there's massive rejection. Anytime price comes to downside here, there has been some consistent rejections. You have massive rejections, massive rejections. So I just need to allow price to come to that level again. Ceteris paribus, all things being equal, I expect some rejections. Now, some persons can take advantage to sell it all the way to this side. Yeah, you know. But if you are doing that to make some good money, just use some significant lot size, sell it all the way to this side. Yeah, but if you get all the way here again and you build it back up, so yeah, I'm expecting that in the long run, Euro, GBP, JPY should change direction and become bullish. But for now, it's trapped between this range. So we can buy and sell until price breaks out. Okay. So that's for Euro JPY. So let's go to our dearly beloved gold. Oh, sorry, GBP USD lastly. GBP USD. GBP USD before we move. Okay, so this is GBP USD, and we're envisaging price being bullish, continuously being bullish. Why again? Why were we looking at bullish? Okay, yeah, this was the reason we're looking at being bullish. Sorry. Okay, so we're looking at being bullish because of one here. So since price tapped into this point, and every time price has tapped into this point, it covers. This is my daily time frame now. You notice at least this particular distance. We covered nothing less than 1,240 something pips, right? So if we look at it this way again, although this one was not just straightforward, it kept going, it went as far as this, retraced, you know, all the way to this level right here. Now, so since price has hit this particular level again, at least it should be able to push up, worst case scenario, to these levels before we can experience another reversal to this level. So if you go to scale down to our lower time frame, daily time frame, these are looks like still pushing smoothly, still pushing, which means it's breaking previous resistance, right? And the last resistance level they just broke was here, and it took it out. So if we extend it a bit like this, so you see, so price should be breaking above previous levels until we get to that point. So since we are bullish now, we expect to keep buying. We just need to find our entry points to buy. Okay, remember, I can have my trend line right here. So which means that worst case price does a retracement, because no matter how it goes up, even if it's going to be bullish, it at some point do some retracement before continuing this upward movement again. And what price is looking for to go to the upside is liquidity. So remember, these are points. So my 4-hour time frame, let me recognize my liquidity points. So they serve like your support areas or where you have cluster, a bit of range. So there's 1 and there is 2. And there is 2. Okay. Yeah, I think I have some questions here. Price is ranging right now. It must break out to the top or down before entry. Okay. Yeah, weekly on GBP USD. Yeah, I think I scaled down. Really? Then it's I'm so sorry. This is my weekly time frame. I use my weekly time frame to recognize major reversal points. Sometimes daily. It depends where I can find it, either daily or weekly. Now I have one weekly, which is here. So price gave me first double bottom, triple bottom right here now. So there's a possibility of reversal. So that's why we've been bullish for the last 2 weeks at least, or 3 weeks, basically. We've been bullish right now. We've been bullish for the last 2 to 3 weeks. That's one. Then, number two, on my daily time frame, I can see that particular upward move, which is breaking above resistance, breaking above resistance, breaking above resistance. And every time it does that, sometimes it just comes down to test that level again. So if I mark it here, you see this particular resistance that I just broke, it came back here. Okay, came back to the test before continuing the move. And when it broke, so retested one, kept ranging. Now it has broken. So what I expect is price should come again and retest this resistance that we just took out. So that's why on my 4-hour time frame, I have this particular, okay, this resistance drawn, right? So if it doesn't retest 100%, then it comes just pick liquidity and go, which is liquidity is one here, and we have another here. So if I go to my 1-hour time frame, you see what I'm talking about. So this is my first point. This is the major resistance broken. This is my first point, and this is my second point right here. Okay. So on GBP USD, I should have a hit of a buy trade. Okay, I should have a hit of a buy trade. So overall, it's bullish. Now, some persons can just enter the buy, not minding some little drawdown if price retraces back to this level before continuing to the upside. So overall, we should be bullish on GBP USD. So let's move to gold. My dearly beloved gold. Now, I know a lot of persons like to trade gold, but you see, gold can be your best friend and sometimes your worst enemy. For a lot of persons who agree with me that yesterday was not funny. Yesterday was not funny for gold traders. Yesterday was not funny. In fact, I personally was caught in that trap, if not for the skill to be able to maneuver. So I marked this particular point here as where I'm expecting price to come to. Remember what I mentioned? I said price always gravitates towards where there is liquidity, either to the upside or to the downside. It just depends on where there is liquidity. So for instance, it's more like, after a while, you need to refuel your car. And so your job is to go and wait for price at the various filling stations, and mostly the closest filling stations to where price is, to where you are. So I'm just trying to use things that you might be able to relate to. So when at every point, price is never static, price is always dynamic, which is it moves a lot. Now, the movements, well, if you want to know where price is most likely going to move to, your job is to figure out where the nearest liquidity is. Price needs liquidity to go up, and it needs liquidity to come to the downside. So where is liquidity? So for instance, as of yesterday, price was at this level here. Now, it could possibly have gone up, and it could possibly have gone down. To the downside, we know that overall, we'll be very much bullish overall, right? So we are looking at, okay, if we are to continue being bullish and we want to buy, where can we buy from? Let me reduce this. Where can we buy from? Now, I just look out for where there is liquidity. And there are two, okay, in fact, there are like 4 areas of liquidity, but I preferred one, which was, there was one around this level. You see all these bottoms right here, especially when they have wicks, lower shadow, rejections, right? Good. So if you do something like this, see that there's liquidity right here. Now, price came for the first time, came to this liquidity, respected it, and pulled up. But it couldn't get back to this high of 29.53, 29.50 something. It couldn't even get there. All right, so it was stopped. And when price is pulling down, All you need to do is, as it's going down, where is the nearest liquidity for me to buy from, which was at this level here. Now, price got to this level. If you were actively watching the market yesterday, it got to this level, it pulled up a bit. So those of us who bought this guy, we made some profit. But remember, it's expected to go back up. So we're still on the trade while price came to the third liquidity again. There is another one here. You see this cluster, right? Good. Unfortunately, this liquidity hasn't been retested. It has not been mitigated. Now, for those who want to understand all of this concept I'm talking about, go back to this YouTube video, listen to it. Now, I'll try to schedule a training in next 2 weeks to talk about liquidity. For next week, I'm looking out for trend lines. Right? There are certain instruments that works swiftly with trend lines. Let's talk about that. Then now look out for liquidities, which is you see all these clusters here. So if I'm to mark these clusters here, the pivots, and I extend it to the future, you notice what I'm talking about. This is the third area of liquidity. Right? So you just know that as it's dropping, it's coming down to the next liquidity. And if at all it was to break this one here, it's coming down to this. So let me show you. You see all of these bottoms right here. You see these rejections? You start from here. And you extend it. So this is more like a false break, what we had there. So you can see that it touched all liquidity points. So yesterday, 1, 2, 3, and 4. So these are the major reversal areas you usually want to watch out for, right? So now gold is trying to pull back up. Now it covered, I predicted to 29.13 and it got to 29.13 yesterday. Got to 29.13. You know, it couldn't continue further. I just know that if you can do that for yesterday, I think that would be enough. Now, you see this particular liquidity is trying to become a flip zone, which is where you sell. Remember, there's a principle that there's a possibility that if price breaks support can potentially become resistance. So this is what we are seeing right here, right now on gold. Okay, so we are seeing the possibility of having a flip zone. Okay, so now, if for me to be confident in buying gold, I need gold to come back down, maybe here or here to buy. For now, I wouldn't just want to rush and buy gold. I wouldn't just want to rush. Although it's at another liquidity level, that's why you're seeing this bullish candle. The reason because it's at this liquidity level right here. So mind you, I will be much more comfortable buying if price can come to either this or this liquidity level right here. So there's a possibility that gold might want to change direction. If you notice now, you see that there's a bit of range, right? There's a bit of range. And the range, this is the lowest part of the range, like the lower part of the range. So here, slightly up. So it's just between this up and down. So I want to buy at the lowest point. Then I want to see if it can sell at the highest point or, you know, retrace back to the downside. So that is for gold. D40. D40 never disappoints like that. It's one one instrument that is more like a one-way traffic. Traffic. This guy likes, you know, just pulling to the upside, pulling to the upside. Sometimes, like for like a week or two, you don't need to think. Just come to D40, just buy. If you are a high risk trader, just buy. Even if you have some drawdown, just make sure you have some good volume, like some good volume. Just buy. It will turn up. But if you don't have good volume, you buy and it's going down, it can potentially wipe out. So for the first time in a while now, the 40 is becoming dicey, which is I've been having smooth buys. So unfortunately, I'm getting a significant drawdown. Now, if you notice this one, now if you want to mark this level here, when price did this, oh, let me see. Really, Esther? Wow, so sorry about that. You maximize your profit on good yesterday till this morning. That's awesome. That's awesome. Now I had to close around uh was it few minutes to 9 or few minutes past 9 yesterday. I had to close. You know, like I said, I was envisaging 29.13. So all was now in profit, but I just felt let me not push my luck too much. You know, let me just take everything out. I had multiple positions. I think I had like at some point I had like 6 positions. So I started closing them out one after the other, one after the other, one after the other. You know. So I think I left two two of them till that past 9 thereabouts. So when it hit that level and it was finding hard to continue, I just closed it. Um, you were trapped, Matilda, with gold. So sorry about that. You see, these instruments, like I said, can be a very good friend and sometimes can be your worst enemy. You know, we just try to minimize our risk. All right. So what I'm saying is now when you have significant drawdowns, I said drawdowns, retracements rather. If you have significant retracement like this, so prior to this time, you've not had this kind of significant retracement on D. So it came massively to the downside. Now, always note that point because no matter how far it goes, there's a potential that possibility rather that price might come to that level, right? And which price obviously did here. So price obviously did that here, right? So now that's one. So price worked its way back up again. So we'll be buying it until it takes out this high. You know, now price took out the high again, which confirms that we are still massively bullish. So we keep buying, we keep buying, we keep buying, we keep buying until we now have some significant retracement, which is here, right? Now, if we mark this level again, if we mark this level right here again, um, okay, let me extend to the future. Now, one of two things is either price is going back to this level right here. Or if we are to now confirm a downtrend, I need price to take out this level. If it takes out this level, then we potentially want to start selling from supply areas. Okay. So for now, I'm still envisaging that price will trace back to the upside. If it should have gone down, then I think this level should have pushed back down. So it's trying to force its way above this level. So if price closes above this particular level, then we are buying it back up again till this level right here. So that is for D40. Mr. DME right said US 2000. Also note that US 2000 is having a mind of its own. Russell 2000 has a mind of its own. So this is like the highest high it got to. So we now have a double top. We have a double top on US 2000. So if you are wondering why US 2000 has been struggling to go up, is because it just hit its highest high again and is respecting that zone. It's not doing an ATH, which is an all-time high right now. It's not giving us a new all-time high. So this is my all-time friend. So you don't know this level right here, where you have massive very significant level, very significant level, right? Now, if you also come down to your weekly time frame, you will notice that after price got to this level, this point is now serving as support, holding price back. On my daily, this is how it looks like. So you notice it's creating a support area, which is a previous resistance trying to become a support level for me. And I'm having multiple bottoms here. So let me do what I call the big brother, small brother. Inside a wider zone for my weekly, my monthly, or my daily, I have another zone, right, which is this support area right here. Now, if price can take out this level, come all the way down, then we can continuously be bearish. But if this level holds, the daily candle for yesterday was massively rejected. If it holds, then we can be bullish. So this is how it looks like on my 4-hour time frame. If this holds, then we can be bullish again. And this is how it looks like. So on my 1 hour self, I have a bit of a trend, which is this like this. I think price just took out. Let's see. Price has taken my trend line already. It's not a perfect trend line. I'll need to scale down to my much more lower time frame. Okay, good. Much more lower time frame. So what I'm saying is, for me to buy it, I need price to go above my trend line. Okay, exactly. So this is the trend line right here. So this is the first hit. Now this is the highest point. Then it tried going up again, highest point. So I mark the two of them together. Now it broke above. Now since it broke above this trend line, you notice that it has not gone below it. So something like this, since it went above, it hasn't gone below it. So this trend line is now serving as support, 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 support. Even though it trickled down, it's still holding its support, support. And now price is trying to work its way back to the upside. So I think for our US 2000, yes, we can be bullish back again until we get to this height. Price is trying to go back to our highest high. If I'm buying US 2000 today, if I'm buying US 2000 today on my 1 hour time frame, I want to be careful about certain zones, which is number one, this area of supply. So I might not want to hold on to my trade beyond this level, one. Number two is this level here, the whole of this zone. Let me just drop a line. This level here. I might not want to hold on to my trade way more than this particular level as I'm buying. And lastly, this height here is highest point of the resistance level. So there are three major areas. So once price can clear those areas, so I keep buying, pushing this. If it retest holds, I buy, push it here again. If it breaks retest hold, then we finally get to this particular point. It's not a one-way traffic, but most likely our Russell 2000 should be bullish for us. Okay. Someone said wheat. Yeah, you should have it. Except you want to trade D30, they are the same. So on your market watch, you just tap anything and type DE. So you see D30, you see D40, right? Just tap on anything and type D. That's all. Yeah, so if you don't see D30, D40, D30 also should do it for you. Think US 100 before we can just, let's say, do one agro commodity, just maybe one. Yes, US 100 also fell. I am very sure a lot of persons fell into the trap of US 100 by buying US 100 yesterday. Yes, 2 days ago, that was Monday and yesterday. Because I think this fall was on Friday, Monday, Tuesday, Wednesday. This fall, massive fall, was on Friday. And a lot of persons were expecting it at this. It tried to just respect, came into that level, tried pulling out, but broke it again, and it kept going to the downside. So as of yesterday morning, when the range, can we buy this guy? But it's already below this level. It's already below it. So that's it. It's already below it. So once price goes below that level, it will find it hard. It's more like saying, um, um, how do I put it now? You've entered the danger zone already. You need to fight hard to come out of that danger zone. But if you've not entered, it's easier to go back, right? It's easy to go back. So price already went below, so it will be hard to go back. It will need some good momentum to really push it back to the downside. So it's easy to keep falling. It's very easy to keep falling. So price possibly just want to do some a little bit of retracement right here. So I want to hold this level strong. Now, yes, these are naturally uptrend, but don't forget that sometimes they go down. And that is what happened to a lot of persons on gold yesterday. Fortunately, gold came back. But if it didn't come back, I'm sure a lot of persons would have been, yeah. So this particular instrument right here. So for those who were with us last week, so I'm expecting it to pull up, take from this area of supply and keep falling again, most likely. Meanwhile, for those who were here last week Wednesday, I think I showed us a bit of this particular strategy. Now, this strategy can be used for scalping, going big lot size, get out. Where is it? Where is it? Where is it? Where is it? MACD class. All right. Okay, good. So now I have my directional bias. Let me put it this way. The MACD gives me my directional bias, which is this blue histogram here tells me that price is up to the downside, right? That's one. So I'm looking out for sell. When the histogram is down, you're looking out for sell. That's one. Two, you now need this moving average of the histogram. That's the moving average of the oscillator. Basically, I'm just trying to interpret it to also be down, which is the momentum should be down for sell. MACD also measures momentum, right? Now, fortunately enough, MACD is down. We're looking out for sell. But look at the oscillator. The oscillator is not down. Let me separate the oscillator. Let me separate the oscillator. Yeah. Zero and okay. All right, so the oscillator is to the upside. So momentum is to the upside. That's why you see that as much as we are currently downward, right, from the MACD, price is right now not going down. It's going to the upside. It's going to the upside. Okay, so mostly you can use this on your much lower time frame. So if you go to your lower time frame, you find out that you would have been buying because on your 15 minutes, MACD is where up, buy. And the momentum is also where up. But the momentum is not much, it's small. Here, the momentum was much. MACD was down, which is sell, but the momentum was to the upside. So you can see that it wasn't really going down. Now, MACD shifted to the upside, and the momentum also shifted to the upside. So basically, what it means that once both the blue histogram and the oscillator, which is the red histogram, shows you the same direction, which is up and up, then you can start buying. The only condition for which you sell is if one, MACD comes back to the downside, MACD comes to the downside, and the histogram also, this one comes back to the downside. Then we'll have sell, sell, something like this. MACD down, histogram down. So sell, sell at that moment. So it's just like a strategy that will help you to go in and go out, more like a strategy, a scalping strategy. For those who, so this is the setting. This is the setting. Let me do it. Let me do the setting. So this is how to do the setting. Remember, I might not explain. You just head over to YouTube and watch this video and the settings to be able to follow this trail. Okay, so you come to your indicator list one, then you come to your oscillators. Under oscillators, you look out for MACD. Good. Now, don't touch this setting. This is default setting. The fast EMA is 12, the slow is 26, and the MACD, that is the moving average of the EMA is 9. Now, apply to typical price HLC/3. This is the only place you would set. So you will have yours as close like this. Just click this and use my default setting, HLC/3. Then you click OK. Right? Meanwhile, before you do that, you want to set your color. I use navy blue. I use navy blue. So just leave the levels and visuals the way they are. Levels, you can also set your color as navy blue. Everything should be navy blue. All right, okay. Then the second one, you come here again. Then you come to oscillators again. But this time around, instead of MACD, you pick moving average of oscillator. Then you leave the default setting. All right, leave the default setting. You set your color here as red. Your levels also as red. Or whatever color, crimson. So you can differentiate. Make this your line to be a straight line. And you can increase it, make it thicker. Okay, you can make it thicker. Then, okay. That's all. So you will see, if you want to know if it is separate or not, just pick this line, drop it anywhere here. All right, then double click, right click, then click horizontal line. This parameter, just change it to 0, then you click OK. You see it will serve as a separator for you. All right, a default separator to serve as a separator for you. You can do the same thing to the downward here. Just drop it anywhere. Double click, right click, then 0 and OK. So it serves as separator. So you will know when MACD is up or down. So currently MACD is up, the oscillator is also up, then fine. The moment MACD comes down, oscillator down, then start selling also, right? So you use it to beat the markets. You can use it on 15 minutes time frame. I don't know, I'm not sure. I've never used it on 5 minutes too, but you can use it on 15 minutes time frame, 30 minutes. Highest is 1 hour. Don't go beyond 1 hour, right? All right, so thank you so much for your time today. I wish you a very, very peaceful day. Okay, you can trade the material, you can trade on MACD. You can do that. Yeah. Okay, you're welcome. So thank you so much, everyone. Looking forward to seeing you again tomorrow here on the review. My colleague will be taking it, so please pay attention. These guys are good. Follow them. Learn how we also analyze the market, so you also can analyze your own effectively. Right? So have a lovely day. Thank you so much. Yes, it can be done on phone. It can be done on phone. It can be done on phone. Dorothy, it can be done.